fellow traders, you're welcome to my channel once more. So in this video we are going to be doing top down analysis for some pairs which we'll be expecting them to play out in this upcoming week. So this is the first video of a series of videos. I'll be doing top down analysis every weekend and I'll be posting them on my channel. So make sure that you subscribe so that you can always be alerted whenever I upload top down analysis video. Now we are going to start with GU. First thing first, we are going to look at our bias, right? We are going to look at the general bias for GU. So this is GBP USD. First thing we can see here is, first of all, this market on the daily time frame gave us a break of structure at this point in time, right? So that was our break of structure. We had an inducement got taken out here, right? And we had a break of structure. Now after this break of structure, right, we had what we call a trading range. So this is our daily trading range. This is our week low here. This is our week low, and that is our strong high. This is our strong high up here. So normally anything that happens within this high and this low is called an internal structure. It's until the market happens to break below this low, breaks above that, we start considering it as internal structure. Now in this our trading range, what do we expect in this trading range, right? We expect that if the market is supposed to be bearish, the market should react from somewhere along this trading range to continue to sell. So let me label this BOS, then that is X. So now if we zoom in now into this structure detailedly, right, if we zoom into what is currently happening in the market here, we are going to see that this market is still in an uptrend. In an internal structure, the market is in an uptrend, creating this break of structures here. So these are our last valid break of structures to the upside in our internal structure. So we label that break of structure, break of structure. So like we normally do, our break of structure needs to take out inducement before consider them valid break of structure. So that's what we are marking out, right? Those are inducements, the first pullback. So that is it. So currently we can see that on this after we zoom in, we see that this market is going up. We even have the market mitigate the POI here, right? Before going up, it mitigated this extreme POI, same as it also mitigated the extreme POI here after this break of structure, right? So it also mitigated this extreme order flow here, same as this other one. So now when we look detailedly, right, when we look detailedly here, we can see that this market is reversing to the downside. Now why is it reversing? On this after this break of structure, we also need to have internal structure. So what does this internal structure do, right? This internal structure is there to facilitate price, to facilitate price to move to the downside. Now once it moves to mitigate something significant here, it can then go up to mitigate the daily supply zone. So now if we go back to our big view, we are going to see here that we have a supply zone above here. We have a supply zone above here. So in the long run, I'm expecting this market to push down, then go back up here and mitigate this, then before it can push down to finally complete this break of structure to the downside. Obviously this might take years, or it might take months, multiple months. So we are not looking to wait for all of that. What we can do here is we can identify where the market currently is trending to and trade in a direction. So in here we do the very thing by identifying our trading range, which is from this low here now up to this high. In this trading range, right, we're looking for the market to mitigate something significant, maybe a significant demand zone, and then we can buy. But if we also look at this and we break this trading range into a simple format, let's say the 4 hours, what we are going to see is we are going to have multiple breaks of structures which can facilitate us. Now, in this trading range, right, if we happen to mark out everything as it's supposed to be, if we mark out everything as it's supposed to be, we are going to have a break of structure here, and this inducement got taken out here, right? That is why we came about that break of structure. Then we also have a break of structure here as well. So now looking at this, there's one thing you can notice from all of this, that in this, after we zoom in these internal structures here, we have what we call a change of characters. Now, why is there a change of characters here? This is to facilitate the internal pullback. So if I zoom back out, you can see that the market has been respecting this change of characters and pushing to the downside. So when I say respect, you can see that, okay, after this change of characters here, our inducement got taken out, right? For convenience sake, I'm marking this because this is where most our clear, this is liquidity, right? This liquidity here got taken out. The market tapped into this zone. It tapped it into this external POI here and started selling. So when the market sold down for some time, the market came and gave us a new break of structure. So this is the our new break of structure which we will be working with on the 4 hours time frame. So after this new break of structure, we have a trading range, right? This is our trading range from this high down to this low. Now you can see how the structure starts looking like. So now currently what I'm expecting is for this market to push up, mitigate something, then drops down to fulfill its to mitigate something here before it change back this internal structure and buy. So our bias for GU is currently bearish on a 4 hours time frame. Now on this 4 hours time frame, right, if you look here, you can also see that we had internal break of structures. We had a lot of structure here. We took advantage of majority of this structure last week and happened to make a lot of it. So if you want to have trade calls like this, you can always join my Telegram group. I'll be leaving the link in the description. So we had this inducement here. The inducement got taken out and we had a break of structure, right? The market also happened to mitigate a zone here. So this is also internal structure. So this is how you do your top-down analysis, right? You start from a bigger time frame, you check out the view, and then as you move down, you update. So now, after that, we also had a valid break of structure here. Let me wipe this. We had a valid break of structure here. So after this valid break of structure was valid because market took out this inducement. Then after this valid break of structure, we had a bigger break of structure. So these are internal break of structures here. We can label them eyeballs, right? Internal break of structure. So majority of the people are expecting price to push back up, maybe mitigate something on this internal break of structure and sell. But what I'm actually expecting is for price to use this internal break of structures, right? Because if price happens to close above this high, I will not consider this a change of characters in this trend, because this is still my strong low. This is my strong high, this is my weak low here. So I'm expecting the market to use these two highs here as liquidity. I'm expecting the market to use these two highs here as liquidity, then push up to mitigate a zone here then we can look to sell, right, to mitigate back this zone here, which is our external zone, which is our extreme POI, right. This is how it looks like on the daily time frame. I'm expecting price to come back, maybe mitigate something on this zone, and then we can sell. So the first target after I look to sell there will be a zone, will be this area here. The reason why I'm targeting this area is because this is where our significant buy pressure came from. So this is what my POI, this is what my trade position is going to look like if I'm to take that. Obviously, if you are taking this, it should be with confirmation, right? It should be with confirmation as we always do. So this is a 9.2 risk to reward ratio. That's 9% if you are risking 1% of your account. There are also possibilities of you even extending it, but I would not advise you extend it. So what we are looking for now is likely for GU to push back up, and then we can look for a sell. But it doesn't see cancel the fact that GU might sell off from somewhere around here or sell off from here. So these are still possibilities, but the higher probability and the one which I'm looking out for will be this zone here. The reason being that this was internal structure, right? After the market has broken out of this internal structure, it has broken out and created external structure here. We are expecting the market to go back up, clean this internal structure, and use it as liquidity to sell. So basically, that is it. And yeah, then I'll be uploading the next video, which will be in the next pair. So make sure you follow my channel. When I upload it, you should be notified. Please subscribe and leave a like.